3:26 p.m. starting the final hour session. Just wrapped up a masterclass in daily profit play. Thumbnail for today: S&P market breadth. Just looking at the chart, RSP, which is equal weighted S&P, compared to SPY, which is large cap or market cap weighted. So equal weight versus large cap weight. We have FOMC tomorrow at 2 p.m. We have Mag 7 earnings. That includes Apple, Amazon, Google, Meta, Microsoft. We have a lot of other earnings. There's over 770 companies reporting earnings this week. It's pretty much the heat, the bulk, and the in like the middle of the pack of like all these earnings reports from last week to this week. Yeah, I mean Tesla was last week, Intel was last week. We had some pretty good performances there. Mag 7. I mean, I know we keep seeing this and saying this, but it's like kind of price to perfection. This price action for today is a little alarming. We also have the Apex Summit. I just think that the market is getting a little ahead of itself. I mean, last week was like, oh no, U.S. China, and all of a sudden it's like, well, you have a taco trade on the 10th, and then we have a rate cut that's likely coming tomorrow. The market's just going to run with it. CPI numbers weren't alarming or weren't damaging. The market's going to run with it. Market cap today is all led by literally the biggest companies in the world. The market's going to run with it. We're sitting at all-time highs again today. So we also have PCE at the end of the week on Friday, and we have end of the month. So maybe some crazy shenanigans. We're trading at 69.08 as I'm talking. Here's live price. We are getting some push and candle levels. Here is my 50+% APR. It doesn't seem like the market cares right now to stop. We've just been slowly grinding all day. Sell off, test, and positive gamma. Like, this is a perfect resemblance of what this market has done most of this year. Since April's bottom, this is the type of price action that has just been so persistent, so consistent, day after day after day in these markets. So we will see. But I am a little concerned that I mean, honestly, like, look, I'm just going to throw this out there. I don't know what the market is showing us as far as points, but I have a feeling we're now like close to 300 points above this 50-day moving average, and that is a huge concern for me. So do I want to be short-term bearish? Not really. Okay. But I don't know. This is like silly price action. Like this little blow off the top move. I mean, I can look at the measurement here. I've got a level that's like 69.70. Do we hit 69.70 and then fall hard? Maybe. Okay. Yeah, we'll see. I mean, it's probably not looking good, Larry. The final 30 minutes of the day, probably not looking good. Same thing. My trade's not looking good either. My little iron butterfly at the end of the day, trying to get it below, 68.85, 68.89 is my break even. I mean, we'd have to have a massive turnaround here in the next 30 minutes. So anything can happen. But, as far as my levels go on the day, we are through my call levels. As far as my daily profit play indicator, we started out center price based on the close yesterday. We are just at the 50-day moving average, or the 50 ATR. I don't really have a reason to say like this is the top. It doesn't have to be the top at all. This market can just drift until the close. So I'm not calling the top. We had a nice winner this morning on daily profit play. Had a nice winner on pinch point. Had a couple winners on my newsbreakers. Like I just was putting out some trades. I've got a silver futures winner today for $250. So all good. But again, chart alarm set here at 85. I'll put this to 89 in case this thing gets back to break even. It probably won't. That's a lot of volatility to kick into the last 30 minutes of the day. Anything can happen, but I doubt it. So, I mean, I could see it pulling back here to like 97. That's where the day started. If we pull back to 89 or lower, that'd be freaking sweet. But I have no idea. I do know that when we started the day, it was a plus minus 20. And from the open, here, plus minus 20, we've gone up 13.6. So, market makers might still push this thing another 4, 5, 6 points, keep that 20-point integrity. But the high low of the day, it's still well below the ADR. I mean, this is a 40-point move on the day. I think the ADR is still trading around 70 something. Yeah, 75 ADR. So, I mean, there's still some room in the tank. There's still pretty large weekly and monthly ATRs. But anyway, I mean, we won the day. I'm happy with that. I might take a small loss and double up here at the end of the day if it's not going to cooperate to the downside. If the 50% ATR acts as any type of resistance, maybe we get a drop. But dropping here to 68.90 or lower would be a huge dump. I'd love it. I don't think it's going to happen. But I want to address a couple things. So here is what I talked about earlier: RSP, SPY. So this is equal weight S&P compared to large cap weighted S&P. This thing has been down for 3 straight days. So look at the difference between RSP performance, okay? RSP performance, which means market breadth is not participating in this new high. I don't like this. Like, this is not a good sign. So either Mag 7 is so good and so strong that eventually this lifts it back up to all-time highs, or something under the hood is worrying me. Again, I want to go back to this SPX chart, SPY chart. Look, we did not test the 50-day moving average. I know that we officially hit it in futures. I get it. I acknowledge that. We also didn't hit it in the QQQ. Did we hit it in NASDAQ futures? Yes. So we tested in futures, but we didn't test it in the actual ETFs or indexes. So has SPX hit the 50-day? No. Has SPY hit the 50-day? No. Has QQ hit the 50-day? No. Why is this a concern? Because we are now, from the 50-day moving average, 40 points higher on the QQQ. That's a lot. What are we on the SPY? 29. I mean, this is going to be like literally a 300-point move higher. Okay. I'm not saying I want to call the top here, but man, I am legitimately worried that this thing is going to snap hard next week. So we're at 298. I mean, I've got to look at a trade. Let me go to not the end of the month, maybe Monday or Tuesday. Let me see if one of these days can offer a dump. I don't know. And this is also like completely a guess. Let's look at it. So if I went to not Friday, but Monday or Tuesday, this is after FOMC, after Mag 7 earnings. How far out can we go? I put in a trade that is working right now. I put this in this morning. So my call side butterfly is trading for about $1. I've got a pending order at 250. So I'm not going to risk a lot in the trade. I'm looking at something that's kind of similar. Let me go out to the 6th. And let me take a look at this one. So now, if I went to the 6th, what? So the 7th gives me 5 wide and the 6th gives me 10 wide? That seems kind of stupid. Interesting. If I did let's see. I wonder what I'm curious what this pays. 25, 30, and 40. So this offers 90 cents. Let me go one strike here. So that's 5 wide. So 8.10 to make $2. Oh, F. It's like, I wish I could tighten this up a little bit. Okay, so that's more risk. So this one offers me a profit trap of over $1,000. I'm risking. I mean, I don't really want to risk 860 if I don't have to. Gosh, is there any better way to do this? Can I do 10, 25, and 40? That's a butterfly spread. Now I got a profit trap of $1,500. I get $1 on this trade. Let me see. Let me see if I can take this trade for $1. I'm going to take this trade for $1, showing $1.15. Let's get lucky on this trade. $1.15. I'm going to throw this in. This is a bonus trade if it fills. I'll try to get down for $1. If I get $1, I'll take it. $1.05. Shit. I don't like it. All right, I'm gonna cancel it. Man, that's really crazy on the strike prices. Let me go to the 10th. Let's look at similar levels on the 10th. This should be a little bit cleaner. If I go, gosh, there's still 10 wide. 10 wide, 20 wide, $1.40, Risking 860 to pull in $1. Let me see if I get $1.50 on this trade. Come on, you son of a gun. $1.45. All right, just got filled at $1.35. Okay, I'm going to put this in the chat. This is just totally a bonus trade for final hour here. I'm taking a live trade. SPX. I will do this. I'm going to put this in Telegram. Okay, so if you're a follower of mine in Telegram, here's a bonus trade. Bonus trade. Full details. We are nearing 300 points above the 50-day EMA on SPX, SPY. Well, I'll put SPX. Highly overstretched in the near term. I'm placing a broken wing butterfly for $1. I got filled at $1.35. $1.35 credit with a $1,000 profit trap with a potential $10 profit trap and max risk of $8.65. Okay, so it is SPX 11:10 expiration. Buy the 70/40 call with one contract, sell the 70/50 call with two contracts, buy the 70/70 call with one contract, $1.35 credit, filled. Okay, so that's the bonus trade. I will throw in, I'll build this out in Strat. So I'll go November 10th, 70/40. I'm going to build out a, let's go long call butterfly. So November 10th, we'll go to the 7,000 to 70/40 here, selling two at the 50 and buying the 70. So there's my trade. Okay, so if SPX is less than 7Z40, keep $1.35 credit. And I'll post this in Telegram. Okay, there's a bonus trade. So where's the risk? If price blows through 70/50, which right now 70/50 out to the 10th is a 18 delta. So, mechanically speaking, it could. There's risk there, but I'm giving myself a little bit of room. I think at 300 plus points, we kind of put the brakes on here. I don't know if it's FOMC. I don't know if it's PCE. I don't know if it's anything, but I feel like this market's gotten a little bit ahead of itself. I'm going to take advantage of this trade. If I'm in for $1.35, I'm going to go ahead and set the take profit at $1 debit or less. Or I'm sorry, 30 cents debit or less. I'm going to go after a $100 winner. So let me see in the trade. So I just did a bonus trade here. Let's go. This is a broken wings. This is just a total bonus trade. One, two, three. I'll put final hour bonus. So final hour bonus, and I'll rename it final hour bonus, BWB for broken wing butterfly. If this thing for $1.35 is trading for under I'll go 20 cents debit to close. Okay. All right. Now we got some excitement. It's 3:40 in the afternoon. We got 20 minutes left. I would love to see this thing dump hard below 95 or below 90. If this thing can really aggressively sell off at the end of the day, that'd be pretty fantastic. Let's keep an eye on this trade for double up. Right now, it's showing some profit, small profit, but some profit. Let's see what we got for working orders. Okay, got filled for 14. Come on, baby. There's some profit now. Replace order. We got some small profit running. Let's see if we can get like a 13 something. Maybe a quick $100 out of this thing. 1385. I mean, the smart thing is just to take it and protect it in case we jump back up, but this might pay like surprisingly well if this thing dumps another like 10 points. Okay, let me get some comments here. Ryan, dude, thank you so much, man. That's awesome. Ryan chipping in some super credits today. That's fantastic, dude. Thank you so much. It could snap tomorrow. Somehow Powell isn't dovish. What was the thought process on the timing here after all the I mean, it's because all this stuff should be priced into the options market. All of this stuff should be priced into the options market. So I'm going out mechanically with all the stuff priced in, doing a nice like systematic trade, trying to play that things stay inside a standard deviation or, maybe 1.25, 1.5 standard deviations, and we make money on the trade. Let me see here if I can close out for like 1390, grab a small winner. Come on. 1405. Can I get break even on this trade? I mean, I need price to drop like another 10 points to make actual money. So I'm trying to get out at break even. Maybe it will, but if it doesn't, whatever. Come on, price. Keep falling, would you? This would be a pretty fantastic like 17 minutes if the market just drops another like 10, 15 points. So if it's not going to fill me here, I will replace this with a 13, 15 and try to go after $100. Maybe get really lucky at a 12, 15. I'll just kind of keep this out there and keep going back and forth. So if price keeps falling, I need this below 90 to make some serious coin. Okay, what else? Yep. I mean, it's looking better. We've turned pretty hard the last 5-10 minutes, which is nice. Okay. So that bonus trade, let's review this for a second. Why am I choosing this trade? Because we are 300 points overextended from the 50-day moving average. Again, I'm kind of calling bullshit on this recent price action that we have gotten a little ahead of ourselves. Look, and I get it that Mag 7 could be good. Okay. But my concern is that we have like a blow off lid and this market's already started to show its cards. We blow the top off here and then we come back and we backfill all of these gaps. And I don't know if that's going to be Powell. I don't know if that's going to be his message. If he's not dovish enough, does the market not like it? What about Mag 7? Is it somewhat of a mix? I mean, I just think Mag 7's kind of priced to perfection, and that makes things a little tricky. It makes things really tricky. But mostly it's my decision is technical and also using the system of the options, just going out to the mechanical side of the option chain. I'm kind of calling, I don't know if this market is just dead set on hitting 7,000 first and then actually having some round number resistance, because maybe that's the case. And guess what? Even if it hits 7,000, I still make money on that trade, right? So this market has to go up. For my trade to be threatened, that bonus trade I just took, we'd have to go up another 2.2% by next week. I'm not saying that we can't, but I don't see this being super efficient if we're up another 2% without having some type of pullback or correction. So, look, I'm taking a stab at it. I could be wrong. If I, get $1.35 and I can close it out for $100 winner, I'm just going to take the winner. If I'm wrong, I'm wrong. But I mean, I think based on what I put in the option chain, it should be okay. I mean, if I took the trade 1,000 times, I'd probably win that trade 90 times out of, 900 times out of 1,000. Like I think the odds of it are good enough. But this last little stretch and the equal weight totally underperforming the large market cap. Looking at the heat map today, of watching 60+% of stocks declining, 36% advancing, and we're still sitting at all-time highs. It's kind of crazy. And yeah, I know the market's got a lot to digest. I know we have Mag 7 earnings. I know we have FOMC. I know we have PCE. I know we have Trump and Xi meeting in South Korea. I get it. But that's the beautiful thing about an options market is all this stuff should be considered and should be priced in some way. Like that is the efficient market theory. So I'm going out to what should be, outside of one standard deviation, should be a profitable trade. Let's see if we're right. Okay. I'm going to watch my double up trade here. I might just make a break even, maybe a quick break even trade. I don't want to close this a break even, but I'm 8 points upside down right now. So let me see if I can just get out of here for a very small loss. 15, maybe a $5 loss, better than $85. 13 minutes. I mean, I'd love to see this thing just freaking drop. 13, 15, just set it at $1, see if I get filled. So I need another 7 to 8 points of dropping, though. That would be a really big drop here. 11 to 90. Oof, that's a 21-point dump at the end of the day. We'll see. Okay. So if we can do a break even's not bad. I mean, that's probably the smart thing, and I can sit here and complain later, but let's go 14, 15. Come on, man. 14, 15. I mean, mid price is 20, 30. We're down to 97.40. Push lower. We're trying. It's so close to the end of the day. It's like everything's going to kind of be like, dollar for dollar, tick for tick. I mean, we're pushing lower. All right. I'm out at break even. Now I'm interested. Now I got to watch it. Okay. So I'm out at break even. I'm going to put this out for double ups officially. Double ups here. Double up. The iron fly is very late in the day, closed for 14.15. Break even. So I didn't lose on the trade, but I do want to watch and see what happens. Now, here's where the money is. If this trade was to get down, if we have the SPX down to 6889, then I make $100 on this trade. Okay. We're trading at 6897.06. So if it stays right where it is, I would lose $85 on the trade. So it has to drop another, 8+ points, 9 points for me to make money on the trade, which is why I'm actually okay with break even in these final 10 minutes of trading. I mean, I love the fact that the market dumped, but yeah, I should have I should have been maybe willing to put in a slightly higher pin, give myself maybe a 20 wide, and that would have been a little bit better. Larry, how are you doing on your trade, by the way? Is your 20 wide doing better? You need 2 points? Okay, you're closer than I am. All right, dude. 2 points. Let's get it. 95 seems a lot more realistic than 90. If you get those 2 points, does that mean you're break even? Or is that 2 points that you're going to be starting to see some profit? I mean, if I'm in that trade and I've got break even or better, I'm probably just going to take the winner. Or if I got profit, I probably just take the winner. I'm not offended by break even here, just because it's all or nothing. So if price for me doesn't drop another $6.55, I wouldn't make $1 on this trade. But a break even result, I'm a lot happier with. Okay, all right, Larry. I am vicariously living through you on this trade, man. Let's see how it goes. Oh, down to 68.92. Look at that thing. Now that thing's down to $13. And there you go. All right. Keep editing. If you can snag a quick profit, that's a great result. So right now I'm showing like 1340, 1350, 13. I mean, you can grab a quick like 60, 70, $80 out of the trade. Better than nothing. Larry, did you close it out? Out at a 170 gain. Good, man. Good stuff, dude. Yeah, we'll see where it closes. We'll see where it closes. I mean, it's better than a loss. I will say that. Obviously, grabbing a quick like 60, 70, $80 to add to my daily profit play this morning and my pinch point and my silver futures. Like, I mean, overall, that'd be a pretty good day. I mean, I'm up like, I think $500 today on winners. I'm watching it obviously come back and we've got 9 more minutes. And for me, if I don't have price below 68.90, I'm not making any money in this trade. I need this to be below 68.90, 68.89 for me to make profit as far as like cash settled. So anyway, good stuff, Larry. I'm glad you're out at $1.70 gain. That's pretty awesome. That was a nice little end of day dump. Market makers, this is pretty cool. This is exactly where we started the day. So this is the first candle of the day. This is the final close of the day, and we're none the wiser, right? So with 60% of the stock market down, it is kind of nice to see like, hey, look, the market didn't go to all-time highs. But it actually did because here was our close from yesterday, gap higher. So we are technically up on the day. But as far as the price action goes, we were up here with the gap higher and we're sitting right at that for the close or close to it. So anyway, let's see what happens. So I have that broken wing butterfly. Let's see what happens. That little bonus trade, it's already up 15, $20, totally fine. Obviously, I'm more excited if this thing goes from $1.35 credit to, 35 cents or less, because I'd like to at least make $100 on that trade. I also like the fact that I've got a bit of a profit trap there for a $1,000 winner. That is not next week, but the week after. So we'll see what it does. But I set this one at a take profit of 20 cents, which gives me $115. Okay, double up for break even there. Winner on daily profit play today. Waterfall trades are all looking pretty good for profit. Waterfall for profit, 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 all for profit. Good. Oil, that's up to about 50+% of my take profit. Silver futures, this one should be expiring today for $200. That should be a winner. Adobe and pinch. Keep an eye on a couple of those things. Dow, that's pinch. That's up 17. It's not too bad. We are at the upside of this trade, 477. This is out to November. That's a swing trade into the Dow. This will be pretty interesting. I think I'm going to take the winner here on pinch. I'm up 20%. I think it's going to take the winner just in case this market goes choppy. I'm going to take the winner here. So I'm going to see if I can get this thing closed out for like $3. $3, $2.99. You dirty dogs. 298, 295 or better. I'll take. I'll move this down. If this gets filled, 295. All right, 295. Pinch point closing out that trade. Pinch point. Dow. That is trade number 50. 2.95 credit. I'm taking the small winner here. 2.95. 2.52. That's a 17% winner. I'm bagging it. This is pinch point. I'll add this in Telegram. Pinch point. Trade management. Trade number 50 for the DIA. Entry was 2.52 debit. Close 2.95 credit. Taking the win for 17% return. Okay, closing that out. We're at 92. Oh, baby. Final 5 minutes. Let's see what happens. I'm going to go back to my SPX trade and see what it's doing. SPX filled. Okay, so this trade would not be offering me profit right now this late in the day. I need price to be down below 89. So, Larry, how is your trade? Oh, it's never mind. It's back up. We're down here to like 92, testing 92 again. But yeah, it doesn't look like it's going to get to 89 for me. All right, 4 more minutes. We'll see what happens. Let's see here. Craig says out of the trade 1855. Craig, what trade is that? Did you get in? Let me see. Telegram link, sure. Yeah, I'll share this. So my Telegram here. So Chris Pulver Telegram. There's a link there. If you'd like to join me for my daily profit play every single day, Monday through Friday, all are welcome to join. Members will get the alerts of my daily profit play. I obviously talk about my services, and we run some sessions and alerts in Telegram. So these are all my services here. But this room is live every single day, Monday through Friday, 9 a.m., and all traders are welcome to this. So here's a link for that as well. And then weekdays, daily profit plan. Daily profit plan. Weekdays, 9 a.m. Eastern time. There's a link for that. Okay. 68.96. So what do we poke highs today? 69.11. Okay. I mean, I'm as curious as everyone else. Like, what does the rest of this week look like? What does next week look like? Does the market hit some type of top? Do we have some type of pullback? This 50-period moving average to me is in at least two levels, right? At least pulling back to the 21 again, or pulling back to the 50 again. The fact that we stretched above the 50 this far is pretty remarkable, because the last time we were even close to that was like 270, 280, and we had this huge drop back in July to August. And then we had another like 240, 250 points. We fell. Okay. We ran up again using the 21, ran again, stretched. I mean, is this officially over the historical bar count? The longest bar count in history above the 50-day moving average is 128 bars. And today we are at 124. So I mean, look, it doesn't mean anything. Obviously, like the markets can just break all sorts of history records, and we have the longest shutdown in history. We got the longest stretch away from 50 moving. Okay. Point is, I don't think the market's going to go too much without having that at least pull in like a magnet. So we'll see what it does. 68.93, final couple of minutes. Had I, and again, I'll know this officially at the close today in the next couple of minutes here, but if I didn't touch the trade and get out at break even, I would be upside down for I'd be taking a full loss of 85 cents right now. So I think I did the right thing taking the break even trade. And congrats to Larry on that win. That's a nice winner. I want to ask Craig on the butterfly. Did you actually get a nice little butterfly trap in there somewhere? If you did, that's great. Okay. And just a couple more, I think one more minute before the close. Okay, a little top down. FinViz heat map, 62.6% of stocks declining. NVIDIA leading the way with a huge bump, 5+% on NVIDIA. Like, there's your market. Why are we up to all-time highs? Why are testing? Oh my gosh, if you get to 89 or lower. All right, it's not. It's at 91. All right, so I did the right thing. Break even was good. 89 is what I needed. I didn't get there. So happy to break even on that trade. It did offer that quick profit on the downside, but I was already out. Microsoft, top 10 company. NVIDIA, top 10 company. Broadcom, top 10 company. Tesla, Amazon, top 10 company. Leading the market. Literally a handful of stocks green today. A lot of stocks red today. Lots of red. So yeah, a little red flag for me as far as equal weight versus large cap. Coming in tomorrow, we have big earnings. Tomorrow is what? Google, Meta, Microsoft tomorrow after hours. FOMC from 2 to 3. You've got the already kind of priced in expected rate cut. It's like 97% baked in. So here's your rate cut with the watch tool. 99.9%. I'm no fortune teller, but I'm pretty sure that the future's now. Fed's going to cut rates by 25 basis points tomorrow. This thing has not been wrong since like 2009. So we've gone a long ways where this thing does a great job of, in the moment, the day day before, like predicting where most of the decisions are going. And to a fault, it's like this is a tool that's been tracking the Fed very closely. I almost think the Fed is forced to be way too transparent to the market. And we obviously see like these big pushes and big extremes where, things get priced in way ahead of time. The market is always forward thinking and the market is loving nothing but optimism right now. So, all right, new guy. Hey, Craig. Gotcha, man. Cool. So anyway, that's tomorrow at 2 p.m. Tomorrow for Daily Profit, we talked about this in the masterclass that I just wrapped up. All eyes on the Fed. There's a lot of volatility that's going to be sticky tomorrow because of the Fed. Most of the fireworks are going to happen at 2 p.m. or afterwards. So unfortunately for our daily profit play, for the daily profit play, we might take a trade. If we took a trade in the morning, it might sit and wait all day until we get paid in the afternoon. That's not really the way I like to take the trade. So we might just be smart, not take the risk and sit it out and just kind of, manage a hypothetical trade, which, that's not really real, but it's better than taking a loss and also better than sitting literally watching the thing all day and watching like price hasn't moved more than 5 points in the last 4 hours. Why am I not making any money? Because if it's any other normal day, we make money on those trades. But it's the, all the volatility is really starting at 2 p.m. and ending at 4 p.m. So the whole day's expected move is going to be pretty much taken off from like 2 to 4 p.m. So probably smart just to sit it out. Okay. All right. So cash settled at 90.88. I would have been like full loss on my 85-cent loser for double ups, but I got break even, so that's okay. Winner for daily profit play, winner for pinch point, winner for a couple newsbreakers trades. That's good. Win the day. Silver futures is good. And tomorrow is another day. Let's see what we have here for that little broken wing that I just put on. It's probably showing some profit. Yeah, it's already up $25. We'll see. I mean, that's a pretty quick adjustment from a high at 11 down to 90. So we already had a ton of. I'm curious if this changed my options a little bit. So the 70.50 has now moved to a 70.50 is now shifted to a 16 delta. So increase my probability of profit a little bit. Still have my $1,000 profit trap, and this trade is offering less credit now. So it's offering $1.20 versus $1.35. So, all right. Let's see. Tomorrow, let's take a look at the earnings really quickly. Fed at 2 p.m. expected to cut. Here's earnings. Here's tomorrow. Let's go after bell, not before. I think after is where all the fireworks are. So after bell, it's a lot of stocks tomorrow, man. Here we go. Anything of note? We know we have Mag 7s. These should be in alphabetical order. They're not. I wish they were. Let's look at Mag 7s. I'll just go alphabetical order here. So it should be Google tomorrow. Caterpillar has earnings. Okay, that's before the bell. Chipotle has earnings. Coca-Cola has earnings. CVS. Deutsche Bank. Etsy. Google has earnings. So Alphabet, they're B and C's. So Google and that's GOG and GOGL. Meta, Microsoft have earnings tomorrow as well. Meta, after bell. MGM Resorts. Microsoft has earnings tomorrow after bell. And then FOMC is sprinkled in there during the day. Paramount. So is it Starbucks? I see Starbucks in there. Yep, Starbucks has earnings tomorrow. Here's a quick cheat sheet. This is the list. So Big Mac 7. So Verizon, Boeing, CVS, Caterpillar, Etsy, Kraft Heinz, ADP, Philips, Energy Play. So I like Chevron, ExxonMobil better. I'm surprised actually Philips is like on Wednesday versus Friday, just because I just kind of like how these stack up on Friday earnings, kind of wrap up the week. But between Wednesday after close, I mean, a lot going on there. Carvana as well. That's been a high flying stock. Thursday morning, Eli Lilly, Merck, in the pharma space, Comcast, Roblox. See how users are doing. See if kids are still playing free games and spending money for fake stuff. Advanced Auto Parts, surprisingly profitable. Same with O'Reilly. Apple, Amazon, Coinbase, Strategy, which is MicroStrategy. Reddit. I mean, are we going to get a run on Bitcoin? Let's check some spot levels here. Gold's crossed over, I think, double digits now. Pullback has been about 11.3% on gold, and pullback on silver, 16+%. I am still holding a put on my SLV shares. It is profitable, but I'm not going to close it out yet. Not yet. Here's SLV shares and a collar trade. I'm up a little bit on that put. It's up, not a lot actually. Even though I went out to, it's out a ways. Anyway, I'll keep an eye on it. So my goal is if I see this one for a $43 put, and this is trading, let's say SLV is trading down to like $40 or $38, even somewhat below $38, then I'll take, oops, wrong spot. SLV, here we go. So if I'm seeing SLV down to, $36, $34, anything below $34, I'll take some profit on my put. And I may also close out the entire collar trade, figure out where my break even is at, and then just sit for that chunk of shares. Okay, nice, Jim. Jim's got a nice winner today, $262. Sweet. Larry says it would have made another 12 cents if I stayed. Yep, sometimes it's worth it. No, you did good. You did good, Larry. $1.70 is awesome, dude. Ryan says I'm shocked they're cutting. I mean, I think they're backed into a corner. They're cutting because it's not because of inflation. They're cutting because of labor. We haven't had a labor number since ADP at the end of September or the early part of October. Like that was right around the shutdown. I mean, nobody knows what non-farm payroll is going to be, and I don't know if it's going to be even reliable. I mean, it's like we haven't seen news in 3 weeks, about to be 4 weeks. So it's like, what good is a data point that's like, oh yeah, this is what it could have been for October? Delay. I mean, I don't know. So we're just kind of trading in the dark as far as U.S. data. Yes, we had CPI. Yes, we had ADP. That is it. Non-farm, I don't know if it's officially on the calendar next week. It's probably still tentative. I haven't heard of any type of like start update for the government again. I think what's unfortunate is everyone that's experiencing this right now, I'm hoping that you remember this when it's maybe time to vote in 2026. If you don't like what's going on right now, then vote. But I think that going into 2026, there's going to be a lot of drama around the midterm elections. There's going to be a lot of threats. There's going to be a lot of, I don't know. I mean, probably gerrymandering. There's going to be, it's going to be like a political sensitive nightmare. Everyone's going to be questioning the integrity of the election and does your vote count? Again, that's 12 months from now. We don't have to think about it until then, but I'm just telling you, like, don't be surprised if there's just tons and tons of drama, which means this shutdown right now, either you remember it for next year when you can actually vote on it, or you don't remember it. And let's see where the economy is. If the economy is in a better place by 2026, well, Trump and Republicans probably stay in majority. But if we see this big shift into like voting far left and voting for like socialist type platforms, okay, that's a very anti this administration vote. But it's 12 months. It's like, who's going to remember this? Maybe the people that are not getting paid right now, they'll remember it. But if this is over and done with, things get fixed and you get back paid, then I guess it could be solved. That's a long ways out. I mean, literally, like my brain right now for like portfolio protection is I'm thinking about 3 months out, 6 months out max. And if I'm thinking out longer than that, it's going to be this crash insurance masterclass, because I have hedges that will help a lot if the market takes a masterful dump, like 10, 15, 20%, really nasty correction. Do we have another V bottom? Do we roll over? I have no idea. But if you want to see what's bearish out there, there's 50+% of your podcasts. I'd say probably more like 70 to 80% of your podcasts or content, newsletters. It's all talking about the bubble. It's all talking about the crash. It's all talking about running to cash. It's all talking about gold and silver. It's all bad. But what I do know is that I can set up a hedge that maybe cost me $250 to $500 that could pay me $5 to $10,000 in profit. I don't get those trades right very often, but if I need it, and even this year, and this is kind of crazy, but even this year, if the market was to somehow, I don't know how we would do this, okay? But if for some reason the market is going to give back literally every gain in 2025, okay? Why would that happen? I have no idea. Massive policy mistake. The bubble burst, something pops it. I don't think it's going to happen. I really don't. But if it did, I have a trade that was a $900 risk that pays over $40,000 in profit. It's not that I want that trade to pay me. It's that it is there to protect the other exposure that I have in the markets. So it would help offset a lot of risk because over the course of, I don't know, all of these accounts, if I have $20,000, $30,000 in hedge profits, then I can do a lot of protection on generating somewhere between like three, four, $500,000 in hedge profits. I can take on some drawdown and still be okay and keep my P&L in check. But those trades aren't fun to manage if you have other exposure. I still have some beta weighted delta in the portfolio. I have some puts out there that increase this. I do a lot of ratio spreads in my project options edge. I have some net positions that I'm probably the most bullish right now, just to see the market. Even if the market limps in for the year, there's a lot of premium that I expect to be rolling in. Like I've got another anywhere between $85 to $100,000 in premium just by the end of the year. Okay. And so if things just kind of stay where they are, I'm okay with that. And if you're in my project options edge, if you're in my waterfall income, we've got some big room. We got like wide margin for error on a lot of those trades. We look at our P&L, we look at our probability of profit. We're talking like 96, 97, 98% chance of profit, 99.5% chance of profit. Very, very slim chance that we're going to see risk on those trades. And so if I'm willing just to ride out a little bit longer in time, sideways is a direction, right? Like the market can go sideways. We might blow this little top off and get to 7,000 plus, but I'd kind of like to see the market pull back. I'll say this. I do have a genuine concern that this market kind of blows the top off here. And then if it comes down for a sweep, if it takes out this October 10th low, I would be very cautious of this market giving back some pretty reasonable gains into 2026. And then maybe it collects itself again, stabilizes, works its way back up. I don't know. But if we blow the top off here and we make a correction that comes down and sweeps these levels, I would be very, very cautious that there might be more downside to come. So try not, don't be a hero. That's all I'm saying. And every day we'll watch this stuff and we'll figure it out. But I do have a lot of dry powder. That is one thing. I listened to a good session yesterday that, most generational wealth and a lot of, profits are generated with those that have liquidity to play the bottoms. And I'm not saying I'm going to call the bottom or perfect the timing, but even if I have the ability to participate in the corrections, if the market is down 10%, if the market's down 10% or 20%, I don't have to call the bottom. Okay. But if I can invest in this area, if I can invest at this level here, and if it comes down lower, I can invest at this level here. Eventually, give it time. I'm sure we go back to all-time highs again. We go back to all-time highs again. There's money to be made there, and maybe it's at higher highs and higher lows and higher highs, but still, I want to buy a dip. I want to buy dips. The hardest part is when you don't get the dip. I mean, I'm a trader that doesn't like to buy. I'm a trader that doesn't like to buy breakouts. I don't like to buy breakouts unless it's very tight defined risk. And there's been lots of all-time highs this year. I think there's over 30 all-time highs for the year, maybe more. Okay. But I hate buying highs. So call me old-fashioned, call me technical. I don't like to buy highs, even though this market does make lots of highs. Okay. But anyway, my point is, if you have liquidity, if you have dry powder, and you can participate on reasonable dips, if we're in a bull market, those dips are shallow. They could be, a 9, 10 period moving average, a 20 period moving average, a 30, 40, 50 period moving average. Those are shallow. 100 period pullback, a 200 period pullback, that's kind of testing the integrity of the bull market. But this entire year, once we got through this April correction, every time we got back above the 50-day, It's just been buy every dip. So your shallower moving averages, your fives, your nines, your tens, your 15s, your 20s, all those moving averages we're offering trade on the way up. That's why I've been kind of watching this 50 day so closely as I'm like, I cannot believe that we are over 120 bars now and we're now 300 points higher than that 50 day. So crazy stuff. Anyway, William says, what is the cost of crash insurance? It is, I think it's 197, William. I think it's 197. So here you go. If you want to reach out to the team for crash insurance, you can email support@pressbirdpub.com, or you can give our team a call, 904-706-3537, and just ask for crash insurance masterclass. So what you have is you have a classroom, you have some recorded sessions. There's 2, 3, 4 video sessions in there, master classes, and then you also have it's an alert service. So I mean, when I post one of my hedges, you can take the trade. And again, those trades are all very cheap. I don't like to spend more than like $500 on those trades, but that $500 risk is something I'm willing to sacrifice for the potential if I need it to pay me, a couple of $1,000s, maybe up to like $5, 10, $15,000 of profit. Like I said, it depends on the trade. Sometimes I hedge in futures. Sometimes I hedge in the S&P, so SPY, QQQ, index-related hedges. I also do a lot of defined risk hedging. I don't like to buy puts. They're super expensive, especially when the VIX is up. So anyway, there's a lot of ways to tackle it, but for the most part, they are low probability trades. But this year, super thankful that I trade this way, and I've been doing this for years because all of this, like this correction of 5%, this correction of 10%, this correction of 6%, this correction of 20%, I had a lot of good profits that helped me. I'm not going to say like come out super profitable, but a hedge was really profitable and it helped me offset some of the drawdown that I was in. So when this market was down 20%, I was down less than 6. Okay. So my managed risk, my risk adjusted returns are far better when I just like, yeah, I play this thing like every typically 6 months or 12 months. And if I need it, I've got it. And it helps me sleep better at night knowing that the market can do some crazy stuff and I still have downside protection with a lot of, upside potential if I need it. Okay. Stephanie, I'm looking at your comment there. I'm a Schwab Thinkorswim. They refuse to give me option level 2, which would be needed for your class. Any suggestions? So Schwab and Thinkorswim, here's the deal. I would say you give Schwab one chance because they can tell you that we won't give you options 2, but you can tell them that I'm going to go to another broker. And you can threaten. And again, it's like, it's a real threat because it's crazy that they won't give you the permissions you want to trade. So what you need is the investor profile to say, look, I am trying to grow my account. I'm trying to speculate and grow my account aggressively. I need to do that with options. I accept the risk. I've been trading for 5+ years. Like that's the investor profile they're looking for, and they will grant you level 2, level 3. If they still refuse that, then literally say, I'm happy to take my money elsewhere. I'll go to Tasty Trade. I'll go to E-Trade. I'll go to Fidelity. Tasty Trade will do a great job. I'm with Tasty Trade. I've been with them for many years now. I like them a lot. I have accounts with Schwab, but obviously I have like full permissions to trade options. So I would say give them one more chance because they are your current broker. But they can't refuse you because if they refuse you, then you just refuse them. Take your business elsewhere. And I know that's disrupting, and it's inconvenient, but it's way better when you can trade the way you want to trade. Okay. So it's customer service. It's a phone call. The key things they're looking for is you have time in the market, experience in the market, and you're looking to grow and speculate aggressively. And you can tell them, look, I understand that I want to trade risk-defined spreads. Give me that permission. Risk-defined spreads. If you tell them that, they'll probably bump you up to let you trade it because what they're not letting you do is maybe they're not going to let you take naked puts or take naked calls and do some fancy, high-level stuff that's undefined risk. But if you tell them risk-defined, I'm trying to use options to grow my account aggressively, and I have 5+ years in the market. They'll listen. If they don't, then literally take your business elsewhere, and you'll be better off for it. Okay. Can I ask why you have so many? I mean, I don't have that many. I have the 21, the 50, 21, 50, 100, 144, and 200. These to me are buy the dips on the shallow ones The bull market is basically stuck between the 50-day and the 200-day. So anything in here is kind of the stay out zone. Let's see if I can draw this. So buying the dip is here. All these shallow pullbacks are buying the dip. Okay. That's buy the dip. Anything in the middle, if we get below the 50-day, between the 50 and the 200, that is a wait and see. Anything below the 200 is stay out or be raising cash or be protecting, put options or protecting your downside, and then wait for the market to resume. So it's bull markets last a long time. In between, you want prices to then dip and then close back above and resume the uptrend. Anything below the 200-day, and this green line is a 10-month moving average. I think it's a 10-period monthly average, and it kind of coincides with the daily 200. So for below that, it's a good time just to not be forcing buy levels, because that could mean that we're rolling over deep enough where we're doing some serious damage to the technicals. Okay. All right. And William is correct. Yep. I've got a discount code. I've got an affiliate code for Tasty Trade if you'd like to join. Let me see if I can find that here. So if you join Tasty Trade, it's in my Discord. Education updates, affiliate discounts. If you come, so this is my discount or my Discord. Where is my tasty stuff here? There's dynamic trend. Let's see here. Dynamic trend, AI dashboard from Edge Finder. Where are you? Trading View, affiliates. Is it here? Somewhere in here. Did I skip over it? Tasty Trade. Huh. I don't know. It's in here somewhere. Sorry. I thought it was under affiliates and discounts. Oh, there. Geez, I skipped right through it. I was going from, anyway, it's right here. So if you click the link, this is in my Discord channel. Come into the affiliates and discounts. Here is the Tasty Trade new account. This code here, PJ9FQTZ84Z. If you plug that in as a reference code or referral code, that's kind of getting you slotted under, me as like just an affiliate. So I don't get anything for it. I've just been happy to be an ambassador for Tasty Trade for all these years. They've taken really good care of me with my advisor account, and it's returning the favor by just sharing that. Look, I think they're a great broker. I trade everything I want. I can trade equities, indexes, stocks, options, futures, forex, and crypto all in one platform. It's pretty nice, and their fees are very reasonable. Their customer service is awesome. Their trade desk, if you ever need anything, you can call the trade desk. Talk to somebody in 30 to 60 seconds. They're always, it's great. I've had a lot of good experience with them over the last 5-6 years. So anyway, good stuff. All right, I'll let you go for today. I'm going to crank out a couple more videos. Good win on the day. Tomorrow is going to be interesting. Come back and see me tomorrow morning. Daily profit play. We'll kick things off at 9 a.m. Eastern time, and let's figure something out. It might be a day to just watch the fireworks and let's make some popcorn and enjoy the festivities together. I will be live during FOMC at 1:30 p.m. So I'm looking to get in early, trying to check things out, assess the price actions, look at some gamma levels, see where option flows are at. If I can find a good trade, I'll take a good trade, but certainly not a day you want to force things, or certainly not forcing high risk. So low risk is fine. High risk is unnecessary, because it's literally a coin flip of whether the market's going to move a lot, a little, noisy, volatile. Unfortunately, like, you're not in control of any of that. So we'll figure it out and kind of use our heads tomorrow and have some nice trade talks. All right. Let's see here. But now that you explained it, makes so much sense. All right, good. Yeah, I get it, man. Like, my charts, you have to remember, like, I've had the same workspaces now for years, and they just get, like, I don't even see the moving averages on my charts. I just look at price action. That's kind of what's nice. I've been doing this for so long that like even all the garbage I have on my screen, even all my tools and I'm drawing on it, I still just see price action, which is nice. But yeah, I get it. Like my charts are messy. I would never say like, oh, look at how clean and awesome my charts are. I would never post this on Twitter and say like, look at this awesome. It's like, this is a mess. This is for me. This is my, this is my whiteboard, you know? So I doodle on it and try to make good decisions. All right. I'll let you go.